Hi everyone, hope you're all doing well, and today we're going to talk about this UK stock. We're going to talk about this UK stock because there is potential that they're going to move from the London Stock Exchange to the New York Stock Exchange, which could be quite an interesting move for this company. And as well as that, it's a company that I've not talked about for a while, so I want to talk about it for a little bit. It's a stock that I own. It was my biggest position until recently, and I started buying Boohoo with the dip that it's been on, and that has overtook it, but it's still my second largest position as well. So yeah, I thought it'd be good to do a little bit of an update into this one, yeah, we'll take a look. So this stock is called S4 Capital. It's a digital marketing company. It is a stock that has done previously very well, but is recently on a dip, which we are going to talk about in this video a little bit more. But it's a company that financially, some fantastic financial performance in the last kind of couple of years overall. Now, what we're going to talk about this is because Martin Sorrell came on and he said that S4 Capital believes shares could attain more value if listed in New York. And it said here, founder Martin Sorrell is contemplating listing the business in the New York following a poor share price performance on the London Stock Exchange, he wrote in the Times. When we started S4 Capital in 2016, I did look at the US market and SPACs, but the entry costs then were too expensive, although it's gone the other way now given the oversupply. So he's basically saying he's not happy with the share price performance of the company, wants to move to the US because he believes this share price performance doesn't reflect how well the company's doing. I think he's more than likely pointing at this dip here. And also he believes that S4 Capital isn't trading at a high enough valuation for what the company's doing, I guess, really. So we're going to talk about that all today. Just the point of view, though, is that, this is from a company's point of view, I think this would be very interesting if they did move to the New York stock market or the New York Stock Exchange. I think it could potentially be a very good move for them. And the big thing which we're going to talk about as well a little bit later on is that this is the thing with the London Stock Exchange. There's so many great UK companies now moving away from them or not listing on them and going to the New York Stock Exchange. That sums up, like, it's a bit disappointing from someone from the UK that we are losing some of these gems. So this is something that does kind of need to get corrected, that we do kind of keep these gems, kind of attract them to come onto our stock exchange in the UK or stay on the stock exchange in the UK. But I think from a shareholder point of view, from an S4 Capital point of view, it could potentially be a pretty good move in the long term, and we'll talk about that. Now, getting onto the poor share price performance, I guess realistically I do think that the company is obviously the massive share price slump it has had recently is a bit unfair, but it still has done very well. Let's not forget, in 2000, so what you might not know is S4 Capital was actually founded in 2016, and the progress they made since 2016 is unbelievable for the company, for the revenue they're putting in, how close they are to profitability. Obviously they're not that much profit because they're focused on expanding, but where the company's at to get there from 2016 is so good. So obviously that's a great standout. But the actual S4 Capital actually didn't come onto the stock market until 2018. So you can see here that this is talking about when it will begin trading on the London stock market, which was posted on September the 12th, 2018. So I think before that it was actually like a shell company they went onto the stock market with. But yeah, it came onto the stock market really at this time. So let's just say we'll go from 2019 here through to 2019, like the share price performed 58%, which is still, like, that's very good. And if we go from 2020 to 2021, obviously this was a CV dip, the stock was up 168%, so that's still very good performance. And if we go through 2021, the company was still up 20% that year. Obviously not as good as the last few years, but still not too bad going. But it's this year, it's down. If we go so far this year, the stock's down 23%, and it's just been, I think in general this has come out because of this dip that it's on right now. The stock's down 41%, lost over half, not over but near half its valuation now. And I think Martin Sorrell's looking at it going, well, that's not very fair. Like, if we were on the New York Stock Exchange, we would command a lot higher valuation, and we wouldn't have our share price selling off like this. Now the big thing is that why is this share price selling off like this? A lot of share prices everywhere. A lot of growth stocks, a lot of small market cap stocks are selling off everywhere. It's all over the US now. We've talked about it so much on this channel already. Like, it's not just S4 Capital that's feeling this. All growth stocks, no matter if you're on the US, the UK, growth stocks, small market caps are getting beaten down a huge amount. So I think this is generally just something that's going on right now. I don't think it's a hit on S4 Capital, and if they were somewhere else, they would probably avoid this dip that they are on. This is just something that's generally going on in the market, and sooner rather than later, people will go and buy this stock again. Look at the share price performance. This hasn't turned to a bad company overnight. It's just loads of macro events that are playing on this share price at the moment. It will go back to this performance that it's done previously as it carries on growing, the revenue as it is doing at the moment. So I think this is Mike Sorrell getting a little bit frustrated on the share price performance, but this is just generally what's going on in every stock right now, not just S4 Capital. But funnily enough, I have actually owned 2 UK stocks that have moved to the US stock market before previously. One of the companies was called GW Pharma. Not sure if any of you guys have seen this one before. Don't know if any of you guys were watching my channel when I was buying this stock. It was a while ago. You're an OG if you remember this time. But I started buying this company, which was from the UK, and eventually in the 2nd of March 2021, these guys were bought out, and I made 100% on this investment that I held for around about 2 years-ish. So it was a good to get 100% return in 2 years was absolutely fantastic. But originally these guys were listed on the UK stock market before moving onto the US side of it. Now, if you do look at the history of when they moved across to the US stock market, the share price performance was still doing okay, and it carried on doing very well, but there's still times here where the share price performance had dips really. And another stock which you might not realise is actually was listed on the UK stock market was Gang. Gang was a UK stock. It was listed on the AIM. Eventually this came onto the stock market. If we can just look here, so this was actually Gang's share price when they were on the UK stock exchange here, and you can see the share price actually performed pretty steadily, especially as they expanded with the New Jersey launch and everything like that. The share price went on a really good run. You can see this was the drop off because of the CV dip here, but then eventually we did go on quite a decent little run up here as we were going to get listed onto the US stock market. And you can see here, potentially it's more the hype of getting listed on the New York Stock Exchange, which is the more benefit. Now, if we do take a look at Gang now, this was on the 5th of May 2020. Gang, a UK-based provider of internet gambling software, raised 54 million. They went on to a market value of 254 million. Now, obviously, if you look at Gang's share price previously when it was a UK stock, pretty good share price performance. Now, if we look at the US side of it, and let's not forget this was coming up to nearly 2 years now, you can see here that they were valued at 254 million. If we look at Gang's share price performance, 262 million. Like, the company is pretty much valued where it was at 2 years ago after going on the New York Stock Exchange. And once again, we're talking about a company which I think has, if we just look at the financials here, if we go from when they moved across, which was around about here, 28 million and slight little bit of profit. They are losing a little bit more money now, but 100 and that's not actually the recent one. If we go from here, 129 million. So yeah, you look at this company like Gang here, it's gone from 28 million up to 129 million. So the revenue has increased, 5x from here. And we look at the company's share price performance and it moving from the UK stock market to the US stock market, or on the NASDAQ for this one, and it hasn't really benefited it. Now, actually, when it did IPO, it actually did okay. You can see here, it did go up in value until February, but very much like S4's share price, this company hasn't done very well in the last few months, and they're both kind of falling off a cliff. So you look at the GWPH, obviously looks okay, but even then, it does have a couple of times where it does bump up and down. And a company like Gang, which is still trading on the US stock market, this company hasn't been, you wouldn't say has benefited from a higher valuation from moving across, because this company has done very well and the valuation is where it was at 2 years ago after moving across. So the kind of point here that the poor share price performance might not go away, unfortunately, one of those that it doesn't really matter if you're on the UK, the US side of it, you are probably not, at times the share price performance will be poor. That what will happen, but over the long term, as long as the companies do well, whether on the the London stock exchange or the US stock exchange, as long as the company carries on doing well, they'll come back into favour, and that's the big thing. So the kind of poor share price performance, I think that's just generally what the market that we're in, and it can be frustrating that I think Martin Sorrell's looking at performance and going, look, we've lost half a value in the last few months, but performance wise, if we have a look at S4 Capital, let's just go on the the growth side of it, I mean, just look at the revenue growth. Let's go on the past here. I mean, look at the revenue growth over the last kind of period of time. If we go from December 2019, 215 million to 342 million, and up to June right now, 480 million. So, that's probably why the suggestion of the company's doing so well, but the share price performance has been bad. Unfortunately, I think that's just something that's going on through the market right now. Now, the point of actually commanding a higher valuation was an interesting point, though. That was the point where I go, actually, this could be a very good move for S4 Capital, because they could potentially command a higher share price valuation if they did move to the US. So an example for that is something like a trade desk. They're a digital marketing company as well, slightly different operation from what S4 Capital do, but similar sort of industry they're kind of in. And if we have a look at trade desk, for example, you can see here they're currently valued at 37 billion. And if we look at what they've just done this year, they've closed the year at 1.1 billion. They are making quite a decent amount of profit, though. The profit is kind of flat, though. It is still quite decent in the profit side of it, but it's not really focused on profit because it's a classic growth company. It's reinvesting a lot of its profit into growing that revenue. But you can see here, the growth side of it is just below 50%, 1.5 billion in revenue. Now, if we just flick back to S4 Capital, for example, and if we look at what they're going to close at this year, they're going to do 653 million. So it's nearly half of what they're doing, over half, but they're valued at 2 billion. So there's a massive gap that you can see here. So this is 37 billion, and they're doing 1.5 billion in revenue, and these guys are at 2 billion. So you can see there's a bit of a disconnect here going on. And S4 Capital, sure, they're not making as much profit as, say, what Trade Desk is, but still they are growing. If you look here at the growth rates, very similar growth rates. Obviously, with Trade Desk, you do have the slightly bit more profit than what S4 Capital do, but the growth rates are very similar. So obviously Trade Desk will have a bit of a higher valuation because you do have that bit more of a profit element to it. But when I show you this now, so this is an example on the metric side of it. If we just go back onto S4 Capital and we look at the valuation side of it, if we look here, so at the moment, S4 Capital is valued at 5.4 times sales. So for a growth company at this sort of valuation, it's, just going off these numbers, it's pretty cheap, really. And if we had a look at Trade Desk, for example, their price to sales ratio is 32. Now, you can argue that Trade Desk is probably overvalued, for sure, but you look at the historic price to sales ratio of a Trade Desk, for example. I mean, even if you go before the big run after the CV times, you're looking at 17s here, 18s, 20s, and obviously it went on a crazy run down here. At one point it was up to 60, but even now, after all the dips that it's been on, if we do look at the share price, it is having a bit of a consolidation here. Even now, Trade Desk is still holding up at 32 times sales, and if we look at S4 Capital again, it's a 5. So this is a big thing that Martin Sorrell is going on about here, is that the poor share price performance. I think generally that's just everything. There's at the moment loads of things are having poor share price performance that are unjustified for companies doing well. Second point about if they move to the New York Stock Exchange, would probably return a better valuation. I agree. I think if S4 Capital was a US listed stock, it would actually command a lot higher valuation than where it is right now. I could even argue even probably double, up to triple the valuation from where it has right now. So the point of the poor share price performance, unfortunately, I just think that's everything. I don't think that's anything to do with the London Stock Exchange. Commanding a higher valuation, I think if they move to the New York Stock Exchange, I think they could command a higher valuation for a marketing company that is, very close to profitability, could potentially do profitability, massive revenue growth. Balance sheet wise, it's very healthy, still in a massive growth stage. You look at something like the Trade Desk, I think it could, and that would have a lot of benefits. And as a shareholder, obviously if they were to move to the London Stock Exchange, it would depend on how they do that. Obviously, they could potentially raise more funds, offer a lot more shares. Obviously, there should be some hype with them moving on to London, to the New York Stock Exchange as well. And I think the share price would probably jump from that, and the hype of it moving over, like how Gang did originally. And through that, I think they would also probably raise a little bit of capital as well. So if they were to move to the New York Stock Exchange, I think it'd be a good move. You'd raise capital. I think share price would probably increase on the hype of it moving up, and I think they would certainly command a better valuation. And like I said, I don't think it would stop the slump that we're in at the moment, but everything else, I think so. So yeah, this is a story to watch with SL Capital, because if it was to make this move, as a shareholder, I'd think it was a good move. So yeah, it's something to keep an eye on, see if it develops and see if it is pushed forward a little bit more. But yeah, I thought this was just a little bit of a good topic to talk about this one with SL Capital. Still happy with how the company's performing. And I've been asked a few times, like, am I going to buy any more shares in this one? Potentially, if it carries on going on the downtrend that it is on, I will buy shares. I think it is at a good valuation. It's just that I think there's a lot more companies at very, very cheap valuations, and that's why I'm buying them over SR Capital. But the longer it stays down here, if it goes any lower, it pushes it more up my buy list at the moment to buy a few more shares in it, and that's where I will buy. But I've still got quite a healthy position in it anyway at the moment. So yeah, that's my thoughts on SR Capital. Hope you enjoyed it. If you could, hit the like button if you're new, subscribe. I'll see you next video.